Our next company that will be presenting is Franklin Partners Mortgages Australia. They've got the Senior Associate David Clegg, who will be here to talk about the company.
Thanks, Nick. Okay, well, today what we want to share is our investment scenarios, looking at mortgages, property, super, superior returns, capital gain, and 3-year exit strategy. What we look at is the current global and Australian market conditions, the lowest in 40 years. If we look back at before the GFC in 2007, the RBA cash rate was 7%. Does anyone know what it is today? 3.25. So our buying power, our income has dropped for a lot of people by over 50%, but cost of living has increased. So what we found are there lots of people who are looking for a higher return on their investments. I want to show you how. We've got the returns of 8% and potential to get some increased capital gain from the shares. So the good, the bad and the ugly. Lower interest rates, they're good for people with no mortgages, but only 35% of Australian households have got mortgages on them. So it's 2/3 of us don't, unfortunately not me, but 2/3 of Australians don't have mortgages. And in fact, the self-funded retirees are having their income cut away. So relying on interest for their income, not knowing where to invest safely with surety of reasonable returns. So sharing the opportunity and take control. What we look at is minimal risk, because all of our private loans, our private mortgages, are actually capital reinsured on the secondary market. So when you go to the bank and you get a home loan for yourself and the bank makes you take out mortgage insurance, we have the same criteria for all of our loans. So they're all reinsured by a European company. Got regular income paid quarterly. We all know that passive income is good income. Not 4 or 5, but 8%. Secured by mortgages less than 75% of the value of the security. At present, our average loan-to-value ratio is 55%. Anyone like to guess what the average loan-to-value ratio is for the big 4 banks for their home loans? Have a guess? I've got no chocolate, I always give away a prize. 68%. Okay, it's gone up from 64 to 68. Okay, so if you're looking at, I guess, the safety and surety of the loans that we're giving out, you can see it does rank very comparably with what else is out there. So, private mortgage investing, I won't read everything there to you, but basically, a lot of people have a misunderstanding of the type of market we're in with the private mortgage investing. We're not talking about people who are unemployed for 3 months, no income, desperate to refinance. That's not the type of market we're after. So we're after people 75% or less LVR, and the average is 55. But if we look, for example, we've looked at a lot of business opportunities here today, and I'm sure a lot of you have looked at investment opportunities over the time. Has anybody here or any of your friends had the bank say, look, good idea, but it's all just too hard to do and too slow and miss out an opportunity? So what we look for are people who have business opportunities, not a home, it's a business opportunity. It could be a developer who needs a few more dollars to finish off their DA, or a very good example of one of our recent clients. They're in the tile business. They were able to pick up, they needed $100,000 to pick up some tiles at a distressed sale, but they had to get it straight away. Spoke to the bank said no problem, 7 to 10 days we'll have the money for you, which was too long. They had to act straight away. They got a loan from us. They then bought those tiles at $1 each, sold them for $9 each. Important thing we look at is the equity that they can put up as security. More important than that is their exit strategy of how they're going to pay us back. Examples of typical loans. Here we have a 12-month one. I almost pointed my pointer down here, sorry. At 3% with the second mortgage, 2% a month with the first mortgage. Most of these are 3 to 6 month loans. They're currently operating in space. They charge between 5 and 10%. Why? Because there's so much demand for it out there. Where is your super? A lot of people are disillusioned with their super. My background's financial planning and doing a lot in the superannuation industry. I don't want to show off hands, but I'm sure a lot of you here would have your own self-managed super funds or know people that do. The reason people are doing it is because they're very disillusioned with their returns. Would that be a fair comment? And the fact that we don't have control. we see the self-managed super fund market as being a big market for this type of investment, as are a lot of the opportunities here today where people have control and can look at the opportunities. So we can show you how to take control of your super and secure higher returns. Tax advantage of income earned in your super at 15% if you're in retirement phase at 0%. So for example, we do a lot of work with financial planners, advisors, brokers and accountants, and if anybody here fits that category, be happy to talk to you about doing some work with you. Where, for example, if you were to buy, say, one of those Pilbara properties in your super fund, you may use the 8% cash flow from our product to help pay that loan off quicker, or to help fund your pension in retirement. Because at the end of the day, it's all about making sure we've got the cash flow in retirement or accumulation. As you can see here, superannuation savers abandoning the big funds. Okay, there's 100 self-managed super funds a week being set up. Many segments of the financial services sector under threat from the simple act of people taking control of their own affairs. Super savers abandoning big funds, rate of net flows into super funds. And there was a report came out the other day showing exactly how much higher the return is in self-managed super funds because people have more control. So I guess what we look at is we've got a pool of people, a very large pool of people who want to do business decisions but struggle with their bank. And banks, if you don't tick the box, they don't lend lots of money, especially since the GFC. As I say, dealing with a lot of developers, the banks just didn't want to give money to them, or small businesses. On the other hand, we've got a huge pool of people who are setting up their self-managed super funds or are just disgruntled investors who aren't getting a high rate of return. So here's the offer we're looking at for people. You can offer you a CRPS for a 3-year term, okay? A fixed forecast dividend of 8% per annum, paid quarterly. How can we afford 8% per annum? You saw the type of figures that we are receiving in payments from our borrowers. 2nd year anniversary, a bonus distribution of 8%. So you can elect to stay in and take more income. At 24 months, you have an option to convert to fully paid ordinary shares, exercised at 45 cents per share. The conversion, though, would override any future bonus payments, and the share dividend is forecast to be 10.88% of the issue price. Convert to ordinary shares, the forecast dividend 0.049 is 10.88%. Therefore, a dividend of 7% equals 70% share value for initial investment. Exit strategy potentially with a 0.25% capital gain. So I guess what we're looking at here is trying to bring together people. We have a lot of people that want to borrow money, okay, but they keep getting stymied. So our problem is, as soon as we get loans, and you'll see on our website the type of loans we have on offer, as soon as we get them, they get snaffled up. What we need is a pool of money so that we can then lend out to these people, provided they fit the 3 criteria. That is, that they've got security, that they've got a good credit reference, and they have an exit strategy that our financial controllers are happy with. And our board of directors has a vast background going over the last 30 years in legal, financial services, setting up loan companies. We've got a barrister, etc. And my job is in charge of the marketing, financial services wise. That's my 10 minutes up. If anybody has any questions, we're just over in the far corner there. Love to have a chat to you about this a bit more. And I say, if anybody has potentially clients I think would like to look at this as well, more than happy to have a chat about how we can work with you. Thank you, and hope you enjoy the rest of the day.